Good morning. I'm Grady on the charts. It's Tuesday morning, April 15th, 2025. Let's go ahead and hop right into the markets. Normally, we get started with a preliminary conversation about the news, and there's a little bit of international news, but nothing's going to affect us in the U.S. markets directly. So, so let's go ahead and move forward. The market is just open, and let's see what we've got going on here today. Okay. Now looking at the higher time frame, I was a tad bit concerned about um, the market rallying, or no, so the market immediately breaking down directly off the open. That was one of the concerns that I had, and it seems that it was not really founded in anything. Pretty very solid. On the 15-minute chart, I'm looking at this up close candle on the 15-minute chart. In the pre-market, the London session ran up to the low of that candle, and we hit that wick. So immediately off the open, so before prior to the open, we ran down below London session, and then we popped right up into this range right here. And so I'm just looking for a bit of a reaction at this point. Now that was this 15-minute imbalance. We opened, we traded to the consequent encroachment at that level, then we dropped down below it, traded to the low of that gap. Now in the opening range, we are running back toward the London session high. Now let's take a look here. This imbalance in the 15-minute chart, or fair value gap imbalance from yesterday, is here. Excuse me, and it appears that we're going to make another attempt to run into that range. And then we'll just have to watch and see what happens after that point. I've been paying attention to the 4 hour time range. The 4 hour candles. Most of the up close candles on the 4 hour range have been steadily declining. And because of that steady decline, I'm a little bit bearish in my bias. I'm kind of a bearish sentiment, but I'm really watching the market to see what it does as we have that initial volatility and the market, kind of wakes up and gets active this morning. We've been having a fairly steady week. Everything's been going pretty well in our trading. So I'm very happy about that, thankful and thankful and blessed, happy about that. And we want to keep that going. One of the things that I've come to understand about trading is that what you leave with that day is what you left with, is what you leave with that day. So coming into the market, we don't want to be so aggressive that we give more than we take. And that's the key, and that's the mentality that we have this morning. Let me go ahead and put my eyes on here. Boom. Let's see if we can see here. On the 1 minute, I see that we hit that level and we've immediately turned over here. It's kind of what I was concerned to see. This is a 30-minute chart. We don't need a 30-minute chart. We can go to 30-second chart. Okay, we have 36 seconds left in this 5-minute candle. My thought process was immediately this type of a reaction on the chart. I need to allow this 5-minute candle to close though. And the thing is if I have a if I have an opinion, if I have a bias about the market that I've really kind of bought into, I really have to pace myself with the execution on that idea, right? Oh, wow, I think the market is going down. I think the market is going down. And then the first thing that I do is I hop in the market and immediately just start selling, 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 selling. Well, I have to let the market mature. I have to let price come to me. I have to watch for, see, we close right at the low of this up close candle. Let's see if there's any more upward price action at this point. It's extremely early in the day for me to even take a position. So that means that it's the probability of this being high of day is extremely low. It's extremely low. The reason I took this sale is because it's in alignment with the declining price action coming into this moment, right? So we ran London session high. We just took London session high here into this up close candle. Now I'm just looking for the rejection down through this area and movement lower. Will I get that? Again, like I said, this is lower probability. This is lower probability because it is so early, all right? So there's so much more price action that can take place before a price decided to go either direction. That maybe, again, I have this bias. Maybe I've really jumped the gun. So it's not a large level of risk. It's just for me, it's more risky than it's riskier than I would normally do, right? I would normally wait quite a bit of time, but it just seems as if the setup is happening at this point. So we're gonna just jump in right here and we're going to see how far off I am in my measurement. It is still early, right? So like everybody else, I just woke up. So excuse me. It's not as if right. I have two or three trades in and the market is really kind of going through its process. It's really started to metabolize price. It's really started going through all of the different ranges. It's just right off the open. We ran to this level, we rejected, and we're gonna see if we press higher. Right? We'll see if we press higher. There may be more price above this level. Right? Because initially, this is where I thought we were going was to this imbalance to reprice to that imbalance. Mm. Well, it seems that I am still looking to see whether or not price violates the 5 minute candles aggressively, right? And it seems like we may be violating these up close candles. Here's the high of the 5 minute candle. We were just testing it. There's the high of the 15 minute candle. We're coming back into that level. The high wick of this candle is inside of the body of this cluster of up close candles on the 15. Mm. Looks like we are going up there to test that 15 minute high. Soon. All right. Okay. That's why we have a winning percentage. Because occasionally we all have to hop in the market, see a trade, and take the trade. You have to hop in the market, you have to see the trade, you have to take the trade. Does that mean that that trade is going to be 100% all the time? Great, boom, 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 boom. We would hope so, but we also want to keep our losses to a minimum and not overtrade, not get too cocky, not get too overconfident, and not fire off rapid fire spray and pray type trading style. On the 4 hour candle, we're coming near the opening price of the excuse me, 4 hour candle. And then what I hate about these consolidations, and I think hate might be a very strong word, But what I seriously dislike about these consolidations is how we reprice to the same levels so many times. Because what happens is, you kind of get this repetitive conditioning towards certain price levels. And then you're looking at those price levels for 3 days, 4 days, 5 days, and then it decides to displace to another range, right? Once it begins to do that, then we're kind of sitting here holding the bag like, wait a minute. Yesterday when you went to this price level, you respected it 10 times. Today, now all of a sudden, price is going, so it's going 15, 20, 30, 100, 200 handles past this point. Like, what's the logic? What's the reasoning? Why? All right, so we'll pull this in. I've been keeping an eye on this LS3 concept. The three Londons concepts. And I've noticed that we have what was it I wrote down? In our current range, we had um 6 London sessions in this current range. That means from day to day, London to London, there have been 6 of them. Only 2 of them are below the range. And that was the lowest dip that we had for the tariff, right? For Liberation Day tariff news. So only 2 London sessions are below um the current, like I said, I can't say really current 6 because we're literally looking at a week and a half or so of trading, 8 days. Oh, a lot of oh, excuse me. Oh, I'm so sorry. That happens to me every morning. This line is extremely vertical. And maybe I wasn't wrong. Maybe straight off the open we were running up. I just didn't see such a clear um this clear movement sorry in price action here. I was looking at this imbalance. I noticed that we went traded to consequent encroachment. We popped up, then we dropped down below it. Once we touched the low of this imbalance here, maybe I should have considered it inversion. And then maybe in the pre-market we rolled over. Do we see market structure shift here? Yeah, I mean, we see the price closing above this level. This high is closed above that level, and then we've moved to the upside. I really do and really was holding on to a very bearish sentiment here. Perhaps I should go ahead and change that. It is prior to 10 a.m. It is like 9:43 a.m. So what does that mean? Um that means that we still have time for price to mature. Now we've just touched consequent encroachment of the imbalance that I had highlighted prior to getting short early, and we just tapped that level. On the 1 minute chart, we're moving past 19,063, around 19,064. The macro begins in 5 minutes. Oh, goodness. Excuse me. Macro begins in 5 minutes. The high of this particular candle is at the close of the 4 hour candle. That's the 4 hour candle close. And we just rallied right to it. And then we've touched it. There are 15 minutes left in this 4 hour candle. If this 4 hour candle is about to close here in 15 minutes, what would we expect to see here? We would expect to see a rally toward the end of the candle. Okay. That makes sense. Okay. Now, if we look at open, high, low, and close, excuse me, I'm assuming that we just created the high of this 4 hour candle. Now we're going to look for the close of this 4 hour candle, and now we're looking to see how, when, and where that would form. Now we're coming in 5 minutes to the macro, which means that this 4 hour candle is going to begin to close the last 10 minutes at 9:50, last 5 minutes at 9:55, and it'll be obviously closed at 10 a.m. Now we're watching these last 3 5 minute candles form. that's going to represent the closing of this particular 4 hour candle. Now, are we going to see any significant market structure created that would give us an indication as to the next hour or so of price action? Speaking of hour or so, this hourly candle has just rallied to the 4 hour up close. Right now, currently, it's the highest up close candle in this range, just about the middle of um the close candle that's just prior to the fall of this particular candle, if that makes sense. Are we waiting for, right? Am I going to wait for the new candle to open in order to get in position? You see, okay, so you see now, are we waiting for the new candle to open? The next candle, do we believe that the next candle is going to run higher than the 4 hour prior 4 hour up close? Are we bullish? Do we think that we're going to rise and take out a lot of the prior daily levels? Okay. If this candle continues to press us higher at this point, then we're going to put on a new, oh, excuse me, then we're going to put on a new, we're going to create a new high for this 4 hour window. So we are, we are paying as close attention to this process as we can. Okay. This is trading entertainment, guys. Remember, trading is risky. There's always a risk of loss. There are so many different variables and so many levels of education that you would need to uh, for you to feel confident in your own ability to take responsibility for your trading behavior. Hmm. Okay, I'm still considering. Are we putting in high of the day right now? Can somebody, anybody, somebody scream? Nope, new high on the 4 hour candle. That's nice. Oh. There's a high and then there's a higher high. 1 minute and 40 seconds left in the 5 minute candle. It is 9:48 a.m. Excuse me. Mm. Honestly, this really has um flipped on me in a way that's beyond my personal expectation at this point. I've seen this before, but this is not what I thought I was going to see today. Oh, I'm so sorry about this yawning. I mean, I have coffee right here. Coffee, come here. I've been up since 6 a.m. Did the whole morning routine. No, I did not put my face in ice water. Now I feel like I need to. 16 seconds left in this minute. 14 seconds left in the 5. We are coming into the beginning of the macro. 9:50. Oftentimes, I believe that the macro has some 9:45 preliminary elements. Pre-macro syndrome. I often clean these glasses, and they're not really they're not reading glasses, so they're really obviously they're the blue light glasses. Um, and what I found is it does not matter what I do. If I ever remove my glasses and put them back on, they'll be smudged, and I don't know how. If I clean them and immediately put them on, there'll be nothing on the lens. If I take these glasses off and set them down, grab it by the lens and put it back on, there's going to be something, there's going to be a fingerprint. It's right in the middle of my where my cornea would be. 9 minutes left in the 4 hour candle. I've been trying to adjust the audio a little bit, and I hope the audio is better today. It's I wanted it to be a little more raw and unfiltered because I was afraid, I was afraid that you guys would be able to hear, school buses outside or kids screaming and playing, dogs barking, lawnmowers and that sort of thing. So when I listen to the audio or listen to the replay, it was like my voice and the entire world around me was completely muffled and suppressed. So I'm looking at that, and I'm also probably looking to get another microphone. I've been using this microphone for several years now. And I haven't really gotten the best out of it because, proper utilization is important. But yeah, maybe I just need to get another cord or whatever. Um, it's not coaxial. That's probably the issue. Yeah, and prices skyrocketing. I was right about one thing. Off the open, we were going to have excellent movement. I was in the wrong direction though. That's oh boy, oh boy, oh boy. Where we getting to here with these 136 handles? Where are we going? Wait a minute. I always do that. 60 to 80 is 20 handles, right? Yeah. Like 6 minutes and 45 seconds left in the 4 hour candle. I was a little bit premature in this analysis of where I thought direction might go. Now that I look at the 4 hour candle, I kind of understand where my misconceptions were as far as where the direction of the 4 hour candle could be. I think I was in the thought process that we could flip, but my idea would require what? It would require us to move past the opening price of this current candle. To move past the current price of the opening price of the current candle and then continue to the downside. But we were never in position to do that. And yeah, I think that's something that I'll have to make a notation of today. I'll watch this back and then document that. Looking at yesterday's price action, it was ridiculous. There was so much back and forth that it was very difficult to tolerate. Unlike today, today is actually fairly straightforward and then one directional. I still don't see the higher time frame bullish, the beginning of the higher time frame bullish issue, except in my notes this morning. I said to myself, wow, the order block that we interacted with yesterday, the down close candle in the hour that stopped the price from descending, did not send us above yesterday's London session, right? It did not break us out to the upside. Lo and behold, several hours later, it looks like it is the beginning point of the upward movement. It is in a large imbalance, and that large imbalance is the new week opening gap. So let's go ahead and take a look at that right now, because I could sit here and say, man, I have my bias. I'm gonna hold my bias. I'm gonna sit here and watch price. I'm just watch price, right? I'm just watch it do what it does, and I'm not gonna change anything. I'm not gonna do anything. I'm not gonna move anything. Um, but while I am doing that, because I'm just really waiting for the next 4 minutes and 30 seconds to transpire, then I would need to say, where is my closing price? Well, here's my closing price. So we closed here, and then we opened here, and then we could take that and pull that forward. And this is that, right? However, this gap, it looks like this gap between these two levels was the unqualified or unutilized area. So we ran down below that, popped back up, traded to the low, even to here, right? So we were on that level. We move up to consequent encroachment, we're just below, move up above, trade higher, close, trade back in, rally away. There's a lot of things going on here. There are a lot of things going on. But because all of this activity has happened pre-macro, it's it's like it's a hesitation move, right? It's like a basketball hesitation move. If Judas swing, right? Are you faking me to the upside in order for you to move left? If that's the case, then in this consolidation, this is just a manipulation leg. If that's the case, I'm not saying that it's the case. I'm saying that if this is the case, then this would be the manipulation leg. So, um, what's happening here? There we go. Okay. Now that we've run to the high of this level, and I'm watching the 15-minute chart at this area, I am now looking at this particular up close candle. Moved. This is the last up close candle before the imbalance. Move down. This is the last up close candle before this imbalance. Before this move down. And I'm just watching and waiting to see whether or not we're going to show this candle any respect. Right? Should this candle? I mean, is this candle being respected by price? We run to the very low of that 15-minute candle. We touched it just a little bit. We've shown a little bit of rejection. Let's go to the lower time frame so that we can zoom in and zoom out. On the 15-minute chart, we're below consequent encroachment as we begin to fade. There's 1 minute and 37 seconds left in the 4-hour candle. We're waiting for the 4-hour close to be established. Currently, it is just below the close of the prior 4-hour candle, so that shows it just preliminary respect. Come on, come on, come on, come on, come on. There we go. Show us what the truth is. Show us what the truth is. Where are you going? Where are you going? Okay. Now that we've had this rally, should I consider that bearish, right? Should I consider that a rejection? Tap at that level on the 30-second chart. There's this rejection and a move to the downside. I still need the next candle to open because I need to establish this level. I just am concerned that prior to, we're going to have price begin to just dissolve on us. And then we would not have an opportunity to get involved with this trade right here. Because what I see is this small imbalance on the 30-second chart. Now we're beginning to fade. Now we're beginning to fade. There's new 4-hour candle. Give us any upward movement. Sold it. Red day today. Might have a red day today. Do we do or do would we would we need to hit the mean threshold of that up close candle? I think my problem here, again, actually, this today, my problem was uh, I saw this small imbalance on the 30-second chart, and I got with it. That was an issue. I think that's not. I don't think that's enough for me to get involved. I don't because I did it just prior to the close of that 4 hour candle, and then we can go to the 4 hour chart. And yeah, I feel like I'm just getting a little too loose with price. It happens when I'm trading lower leverage. When I'm trading lower leverage, I sometimes get too loose with price because um the sort of that pressure is sort of off. 4 hour close. That's what that is. We're gonna go to, and then we're gonna go. Yeah. So we hit the low of that close candle. I said, oh look, order block. 10:02 a.m. On Tuesday, April 15th. Skip. I'm thinking this the thoughts that are going to my head right now, especially about Tuesday's price action. Um and the way that we traded yesterday. Um my expectation personally, and I probably shouldn't expect anything out of the market currently, but my expectation was more normal price action. And like I said, I think that expectation is something that I should not have placed on this current market. Um, I really need to have a live news feed going right now because anything and anybody can say anything or do anything, and I need to have that up early, right? Too early in this new candle. That's the issue. Yeah, too early. Probably too early. Can you hear the tone of my voice? All right. Um, yeah. I think that just the tone of my voice is kind of giving away this sort of change in my approach or change in my mentality toward the markets. And it's not just uh, it's not just yeah, I don't know. It's just today it just seems I don't know exactly. And I think the thing that I'm really the most hesitant about is I had um a bout of greed hit me the other day. It's yesterday we had a good trade, and it ended up with a very exciting ending. I created a short for that, a shorter video of yesterday's trading session, but we had a really exciting ending where we held and we held and we held and we held, and then price finally came to not within a tick of our take profit, but it touched our take profit number for number, right? And I guess you would say that is to the tick. But, sometimes it's off by, your exit is 50 and price comes into 25, right? Your exit is 50 and price comes into 75. So it just doesn't quite get there. But visually on the screen, it was pixel per pixel. And they did not give me the exit where I wanted it. And so it was crazy. You check it out. Check it out for yourself. Watch the video and you'll see what I'm saying. So it was such a rush of excitement, which is something that happens occasionally, especially if you are really putting in the time. I think that the entire trade in real time took over an hour, right? But um just watching price go back and forth and watching price go back and forth for that period of time and then have it finally come to your take profit, it's almost like, yes, right? I've done it. Not that I took the proper trade, but well, followed it through to conclusion and to completion. Um, and so then later on, I was thinking, wow, I'm doing so well. I got two or three good trading days in, and I started thinking like most traders think. Let me increase my leverage, right? So I think that's kind of one of the things, the experience that I'm having today is not the idea of increasing leverage, but I internally, mentally, I'm trying to pull myself back from the brink of that gambler's fallacy type of mentality, that idea that um the market is doing something according to, my design or my will. And it's not. It's trading the way that it's going to trade. Like today. Today is like I open my analysis is completely inverted, right? We went down below the London session imbalance. We popped up above it. We traded. As a matter of fact, I'm looking now and on the 15-minute chart, just to put us where we are now. You see the imbalance here in the London session. We created another imbalance here. We go down below it. We close high, make a lower close, make a higher close, right? This closes above this close. We open, we drop down, and then we take off, right? But all of that happens prior to the London session open. And I was sitting here and I was looking at the market over and over and over, and I was doing different things. And I told myself, where am I wrong? Like ask myself multiple times, where am I wrong? Where am I wrong? Where am I looking at this thing backwards? And yeah, and so that's kind of the idea that I have. Yeah, we're down two trades with very large stop losses. It wasn't a narrow stop losses on either of these trades. I wanted to let them breathe. Because coming into these areas, sometimes as you're reaching into an order block, you'll make a high and then you'll want to reach above that high and then you'll want to go lower or vice versa. So, oh, uh, yeah. But for now, I think maybe the issue is that I'm not seeing it. I'm not seeing the market. I'm not feeling the market. I'm not in it. And I need to go ahead and shut the thing down and come back tomorrow. I'll keep at it. It's just that we've done well to mitigate some of the drawdown that we had in our account during the the Liberation Day excitement. I think we hit max drawdown on one of those days. 5 minutes is closing on the ES, and we ran to the wicks of that 5 minute candle. Now we're dropping down a little bit. And so that, yeah, so the tariff news kind of gave us a little issue, right? We developed a little trouble. And so we've been digging our way out of it steadily. No issue. Now we've come into today and we've hit a bit of a snag early on. So there's that. Let's see what happens on the 5 minute chart. We're gonna violate this high on the 5 minute chart. I mean, we just pulled back just a little bit, and pullbacks are fine. Okay, let's see if we close above that down close candle. Or yeah, if we close above that up close candle. Oh. Notice we just run above it. The 1 minute chart does not look very appealing in either direction. I don't feel like the 1 minute chart is giving me enough information. I think I'm going to sit on my hands. I think I'm going to sit still and do nothing. For one, the market is moving in a way that I wasn't quite prepared for. And so I did not create the opportunity, to even get involved. Well, do I think that this trade is finished? I don't think so. It's just now that I see, now I just currently see the imbalance that we've just traded up from. I just see it, and I did not see it before, and that's upsetting. Here it is. We dropped down out of London. We took London low. When we took London low, of course, like I said, my initial bias is that we were going to run here and hit this along with this level, and then make a lower low. Fade this level to the downside. We dropped and we hit this tiny imbalance, which is a large 15-minute imbalance just below this low. We took out this low and this low. Then we rallied to this area. It is 10:12. The macro is over, though. The macro has ended. And what did we see? We're in this range and we're in this area. And I just touched the lens of his glasses. Now I can't see. I'm completely blind. I'm completely blinded, everybody. I'm completely blinded. And what did I see? Maybe there's an opportunity for us to trend higher for the rest of the day. Can I get involved in the trend? It's the question. Because it's not really one that I was truly believing in. So it's a little rough. It's like, my expectation was that, even in this regard, that we would run the 4 hour high. Oh, excuse me. Oh. Hit this order block, right? So we just tap mean threshold with the wick of this candle. That we would run, tap the mean threshold with the wick of this candle, that we would drop down into this imbalance. Once we got to this area, then we would trade, move back up into this range like that. Sell it late. And if this trade doesn't go, I'm going to stop for today. If this isn't our trade, then I'm gonna stop. I mean, it's possible that we could pop back up and run mean threshold, right? Put wicks up here, still close below that low, and then move lower. It's just that it's after 10 a.m. Excuse me. It's after 10 a.m. I don't. It's after 10 a.m. and the 5 minute candle is moving down. This is an odd sort of a pullback that we hit that level and then we drop right back in. 8, 7, 6, 5, 4, 3, 2, 1. If I get out here, I might look for another entry. If I decided to get out here, I would look for another entry. But that move away from the order block gives me a little bit more confidence to stay in this trade. I probably shouldn't though, because why? Because I'm blinded. I'm bias blinded. I am bias blind right now. That I've been looking for price to move lower. So anytime price pulls back like this, I'm holding almost on a wish, right? I'm holding almost like on a wish. So on the 15-minute chart, we hit that level and we rejected and pulled all the way back here and closed. This 14 minutes. So 14 minutes of this 15-minute candle is a lot of time. That is an extremely large period of time. Um, is where I would want to see price run into this wick of this candle and then reject and then move lower to stay below the consequent encroachment of this gap, fair value gap, volume imbalance, right? We are here at 10 a.m. and I don't want to see this gap inverted, all right? Meaning that we come to the gap, we move up above the gap, then trade back to the middle of the gap, and then move higher off of a higher time frame imbalance that's been sitting here, right? Which is entirely possible. With that in mind, I'm watching this imbalance on the 1 minute chart to see price move away from it. Now, Grady, could you be wrong multiple times in a day, looking at the same chart, looking at this information over and over and over and over and over and continue to be wrong? Yeah, actually, that's true. That's true. I could put on multiple trades in rapid succession. In rapid succession. Yes, I could put on. Yes, I could. Yes, I could put on a lot of trades in rapid succession and then watch as price begins to continue. Oh, 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 that's the type of stuff I like. That's the type of stuff I like. That's me likey. All right, now let's watch that. You see how we had that stab to the downside? I don't like that. I don't like that. I didn't have news. I did not have news. There was no news. Then we made a sort of a plunge. Now, if that's just price slipping, I'm happy with it. However, you have to always be careful when we see price do that. Why? Because a down close candle would stab down toward an imbalance or a gap in order to propel it higher, right? Now that we've slipped from this area, we've watched this price close down here. It did not immediately pull back. That's number one, that's good. We're going to watch this next candle to see whether or not it rallies to take us out. Roughly around, we're roughly around break even right now on the day. And that's fine with me. That is fine with me. But we've come into the 10 a.m. level and then we've hit this zone. We've hit this low of this um order block and then we've begun to move down. Do we get continuation, right? Do we get continuation or is this a higher time frame pullback? Continuation or higher time frame pullback. We are sitting at break even right now. I'm gonna move my stop loss to mitigate the loss of any more on for the day. And then we're going to just pull back and watch this trade. And you're like saying, but hey, but you don't have a stop loss. I do not have a stop loss, and I am targeting what? This looks good, you guys. That's what I'm looking for. Why? It's because this low is just below that low. That low is below the other low. But then if I go to the higher time frame, I'm looking for move past yesterday's low. Right? This is where we stopped yesterday. We couldn't get past. Going past that level today makes a little bit more sense. If this sets us up as a higher time frame fair value gap, that would be cool. If this is moving faster than we anticipate, that's even better. That's even better. Now, all of this looks like fun and games, but remember, everybody, that trading is risky. This is trading entertainment. I'm not really here to teach you guys or get you guys involved in trading to have you guys risk money that you cannot afford to lose. It's just an example of what's possible if you put in the long work and the long hours. Maybe one day you yourself could, say, hey, look, I think maybe, but you'd have to be extremely dedicated to this type of activity. It can be it can be rougher than you would imagine. Um, so let's see, I'm gonna slide this down just a little bit. Now I'm watching the reaction in this imbalance. Remember, this gap, we traded down below it, we traded up to it, now we've dropped down into it, and we're above the consequent encroachment of that level. Many traders, oh, sorry. Sorry. Gotta get back, gotta get back to, shit. Sorry, I gotta get back to, sorry. All right, so we've come back to consequent encroachment as area, and then we've stopped. So many traders at this point are going to get long. I'm not in position to do that. I've made a fairly decent trade, roughly at the high, it was roughly about $300. But I was looking for hitting the order block, possibly, right? I had it available as an idea and a concept to do. Then moving lower, the speed and aggression at which this price is returning to this level states or says to me, Grady, I think what we're gonna do is drop down to this level, the wick into that down close candle, and then move higher. I am probably going to be stopped out by this. I do not see this as a long-term down close trade, but I'm not exiting, am I? Nope, I'm not exiting yet. No, I'm not exiting yet. Should I? No, I shouldn't, because I took the trade. I took the trade. My stop loss is protective. My stop loss will help me work down kind of like the drawdown issues that we've had from the first couple of opening trades. So we're not in a bad spot. You know, I want to see this trade continue to the downside, of course. We've been trading for roughly about an hour. I don't want to overtrade, which means that the analysis that I've done on and the amount of risk that I have exposed myself to is um enough for one day. I don't want to exhaust that, right? I don't want to dull that edge by attempt after attempt after attempt after attempt, right? Because if I can't get in and I keep banging my head against the process over and over and over, then maybe something else is wrong, right? Maybe today I am not in alignment with the markets and I need to take some time to reevaluate, right? If we move down below this imbalance, this would be a small amount of confirmation that maybe we are on side. And then we'll stick with the trade, we'll stay in, and then we'll see what happens. There's a lot of wick down there. Because there's a lot of wick, it seems like, hey, strong rejection area, right? It seems like, ooh, right? Like, boom, boom, like, boom, boom. Excuse me. Because we're back in this area, this is always a very thought-provoking zone. Thought-provoking. Um, yeah, it's a very thought-provoking area. What if, when and where? This, I don't like that. I don't like how flat that little area is. I don't like how flat that area is. Yeah, I would like that to move just a little bit more. Okay. So one of the things that I struggle with, and many of you guys struggle with, but I especially struggle with, is accepting accepting how much time trades actually take. Because some days, yes, you'll enter a trade and literally in 15 minutes you are where you want to be. You're hitting that target zone, you're in, up, and out. And it is what it is. Right now, I really would like to change my mentality and mindset about this, right? Is it breakaway gap, entry drill? Okay. Because I am less antsy, less jittery about entering trades than I am about holding trades. It's one of those things um the final countdown, right? Dun-dun-dun-dun, dun-dun-dun-dun-dun, dun-dun-dun-dun-dun. The final, and when that number starts to decline, I feel something. It's like a final countdown, like Jesus, that number was larger. Now it's smaller, right? The final countdown. So yeah, so that's I mean, you have to trade to know you. You won't feel this. You'll experience something different, right? You won't experience what I'm experiencing. You'll experience something different. And I'm still watching this candle as it comes into the middle of this 5 minute candle. And it's at consequent encroachment of that previous gap, and it's dancing at that spot. Oh, like I don't, I'm watching that. That's what I'm watching. On a lower time frame, we've closed below it, and then we have a wick that has a up close candle with a wick that is moved up to touch that zone, the source price, to do the calculation. And if it's not enough, then we'll return higher. If it's enough, then we'll decline. We're gonna do the calculation and then we're gonna continue. Come on. Let's see what we got here. New 1 minute candle. My eye is here. I'm not watching price right now. I'm watching this. I want to see this last minute and 40 seconds of this 5 minute candle. I want to close below consequent encroachment. I don't want to see us begin to rise at this point and rally. Because this doesn't seem like the type of gap that would be a fair value gap. It doesn't seem like that's a type of place because look how high up the range we would have to travel in order to get into the imbalance. And then I expect what? Price to return? Not really. I wouldn't really expect price to return. I would like this block of up close candles on the 1 minute to hold my price in place. I would like to see us reject at this place, at the high of this gap, high of this imbalance, and begin to decline here. I don't like that long wick. I don't like the overlapping wicks and bodies. I do appreciate the fact that we've come from just tapping the mean threshold of this up close candle on the higher time frame and then sliding down. And I believe that that is on the I can't even I know it sounded like I said something untoward, but I did not. But it seems like but get down. Get on down. Hey, it doesn't listen to me. It does not listen to me. I've been screaming at this screen for the longest, and it just will not listen to me. Mm, okay. Mm-hmm. 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 It's 10:30 a.m. and we've returned to this imbalance. On the 1 minute chart, the way we closed in the discount was beautiful. The way we begun to close in the premium of this range is not so hot. That's an indication that we always have to keep an eye on. Where price decides to close is especially important. Coming back into this range should never happen. We should never come back up here above this level. So I'm going to put my stop loss here. But Grady, you're choking your stop loss. You're not allowing to breathe. It doesn't really matter at this point. We've descended quite a bit from where we entered, which is lovely. That's not a problem. We descended a roughly 100, 600 ticks or so. That's not a problem. The problem is, because of the consolidation nature of the range that we're in, none of the moves can truly be trusted until we break the range, right? Till we break the range, it's like, no, I don't think we should really just kind of sit in a play and watch it come back against us, thinking that it's not going to just say, "Oh, I'm just looking to take out the last high I made," or I just made a low. I'm just looking to take out the next last low I made, right? So we're seeing these changes in direction, but they're not long-lived changes in directions as much as I am trading to the inside of the current range, right? I'm not going to breach the current range. I'm gonna trade to the inside of the current range, and then I'm gonna turn over and I'm gonna run to the because this is exactly what we can kind of describe here is that we came up and hit this level and we dropped down, but we didn't breach the range, right? We didn't really breach it. We just kind of dropped down into the inside of the current range. There is sort of somewhat of an imbalance here, and if this were just a real regular fair value gap, we just closed in its premium and turned over as if it were, just a fair value gap, which would make you think of what I put here. And this is not truly a fair value gap, so I'm just going to put volume imbalance. But it just makes this look as if it's an inversion, right, of the gap that we went up, boom, we went all the way through it, came all the way through it, came back to it, as if none of this displacement, none of this manipulation was here. And so I'm I'm gonna let it hit my stop loss. Is what I'm going to do. I'm going to let it hit my stop loss. I'm sitting there thinking, oh, I could take $181. But what if everything that I just said was just, fear speaking, right? And what if I was just afraid that it was gonna come hit my stop loss? So then I started talking and I talked myself out of a great trade because I was just a little bit nervous about what it really meant for me and my account. But Grady, you have enough now to hop out and mitigate your drawdown for the day. I do. I really, really do. However, um, again, I would rather be wrong about this gap than get out right now. Okay. Remember I said, oh yeah, I don't think that's the type of gap that would send price lower. What if it is though, right? What if it is, and I in a great place, and all I need to do is watch to see if price stays below consequent encroachment of this imbalance on the 5-minute chart. I'll go ahead and give myself a little breathing room. I am not in the gap. And though, yes, price could run the entire gap and hit this down up close candle, which, we love when that happens. But what if we stay below? What if we stay below the fair value gap? Stay below the consequent encroachment of the 5-minute imbalance. And my nervousness, what do you call it? Paper hands. So it was like jump out, jump out, jump out, jump out, jump out, right? And then the price rolls over and then swan dives, right? That's not proper trading because I'm trading my emotions. I've already took the analysis, I've already took the position. It's in alignment with my higher time frame overall bias. The movement to the upside was to put us into position to accomplish liquidity, right? Our liquidity goals. Will I be able to stay in this trade, excuse me, until it's mature? Is the is a twofold question, right? One part is up to me, and one part is up to the market. The part that I'm responsible for is a good entry, proper stop loss placement, and then respect for price action and the price action logic. Um, the the difference for how do I put this? For you guys, for no, no, sorry, twofold. What I do, and then what the market does. What the market is going to do is it's going to seek out liquidity wherever it can find it before it delivers to where it should be, right? Now, is that my stop loss? Could be. But if it hits my stop loss and I'm in profit, then I've accomplished the goal for that individual trade. So if I have 5 trades and 3 of the 4 of those trades are not in profit and one of those trades is in profit, the trade that was in profit is a part of my trading system, right? If I'm in drawdown, I take trades to make money. For what? To either reduce my drawdown or to increase my profit. There's only those two outcomes, right? Um, I don't take trades to increase my drawdown, if that makes sense. So in this regard, we're watching to see whether or not this 5 minute imbalance is going to be something that's respected by price, or if it is just a gap in price that facilitates, I don't know, the misunderstanding in price because we created the gap. And I know that all gaps that are created are often utilized later on or immediately. So let's see if this gap is utilized immediately or if it's utilized later on. If this 5 minute gap puts us down below this 5 minute up close candle with a solid close, then that says a great deal more about the nature of today's price action than it does about um whether or not uh I've traded properly, right? Yeah. So this nice little pullback is one of those things that I do not get emotionally involved in this. Don't get emotionally involved with that. Um, and and obviously, I can only speak to traders who have my particular disposition, right? If you have my disposition and you see that number go from 500 back down to 100, and your stomach says, "Bro, you just gave up $400." And then you see it go from 100 back to 300. Do not get emotionally involved with that, right? Just as price, has its rises and falls on the way down, it has its rises and falls on the way up. So we're still refocusing ourselves toward what? Where is price action pulling back to? How is it interacting with the down close candle? Is it going to and through, or is there some sensitivity at that area? Is it low resistance? Is it high resistance? Is it right? What is it doing? We've moved down. The low wick of this candle is near the closing price of the prior down close candle on the 1 minute. But have we violated it? Have we penetrated it? No, we're still respecting at the high of this colored in imbalance. So that starts to make us think differently about this gap, right? It starts to make us think differently about this gap. Why? Because it isn't sending price away with velocity. It hasn't sent the price away with velocity yet. Now I am considering my exit here. Now I'm considering an exit because we're not seeing, well, we are seeing a 5 minute candle close lower. We want to see continuation to the downside to say, yes, this gap sent price away. We still have to overcome this down close candle. And all of that to do what? Honestly, all of that just for me to move my stop loss. It doesn't mean I'm going to do anything else. It means that I want to see us get down below these down close candles, or I really want to see us um, negate resistance, right? I want to see us price through these levels on the higher time frame and then begin to negate the resistance and say, oh, we've already calculated. We've already calculated. We've already calculated. Now watch this. Now watch price here. My eye is here. My eye is here. New 5 minute candle. Going coming up to the opening closing price of this 5 minute candle is normal price action. We've seen that several days in a row. It's normal price action if we're bearish. Dropping down into the wick of this down close candle is normal price action if we're bullish. Just tapping in, linking up with these down close candles, doing this sort of stuff is normal price action. It's in a tight range, lower time frame consolidation. There's a lot to give back before I decide to exit. But once we come back into this level, come back to this high and reach that high, I'm going to exit. At this point, I'm moving my stop loss down into this range because I really don't want to see us this high in the range right now. With this small displacement to the downside, I don't want to see us in this range. I don't want to see us up here. This is not where I want to see us. And the reason that I don't want to see us there is because of all of this. Because of all of this. Like for what? What are we doing up here? Like why? Why? Like what are we doing? This touch of this closing price of this 5 minute candle should have been like, oh, that's cool. Anything beside that, I'm moving my stop loss down. That's my reward for processing time, processing price mentally and emotionally. Move my stop loss down. If you're gonna come up here and hit this and then you take a swan dive after that, then it is what that is. But now we're at the high of the close of this close 5 minute candle. We put a wick in. We've communicated where we are, what we are, who we are, just like we did here. Now we're going to find out the truth about whether or not we're continue to be bullish on the day. Now we're going to find the truth here, and the truth is we are going to be 1 minute 38 seconds. It looks like we're going to be bullish. And I think I'm going to go ahead and take this exit, and we're going to close the day out practically as consequent approachment. 1 minute 28 seconds left on the 5. And yeah, there's nothing about this that even looks bullish. I have my stop loss in place. I would rather click the button than see it hit my stop loss. However, that white line is the high of the 4 hour candle. We're back at that range. Let's see. The high of the 15 minute candle is very close, and I'm not going to move the stop loss to accommodate it. The high of that 15 minute candle is right there. Again, I really did not want to see us in the back and forth like this all day. It's just not, yeah, it's just not right. And even in this imbalance, I don't think we even on the 1 minute. I'm gonna tap my stop loss in just a second here. But here in this little gap, I'm above consequent encroachment on that level. Sorry, delete that. Yes, remove that. Yeah, I'm above consequent encroachment on even on this small imbalance here, and we've traded all the way down and traded all the way back up. So we have 4 seconds left in the 5 minute candle, and it's way up here. That's extremely bullish. The only thing that will keep us in this trade is an immediate descent. It's just if price is like, hey, I'm going down here and now. But the 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 way that it looks is ridiculous, right? The way that we've come all the way back in, hit the low end body of that candle is ridiculous. We would just need to have just immediate descent with low resistance and just say, oh no, I just came up here to to do this, to come into this area, to tap this small imbalance, and then to go. Any moving around is going to hit my stop loss. Any popping up to the other side is going to hit my stop loss. And we're waiting. And we're waiting. I really don't want to be a scalper. I really don't like scalping. Um, because I've missed very large moves just getting in and getting out. I've just missed some extremely large moves just saying, "Oh, I'm gonna pop in and I'm gonna go from here to there and I get out." And then that's the beginning of a day-long trend. You see this little drop back down to 200 and something dollars? This means I need to exit here. I wanted it to be low liquidity, but at the beginning of a 5 minute candle, it's just going to be a long down close 5 minute candle with extreme high. We're going to watch this on the 30-second chart. See, it's going to come back up into this range. It's going to stop us out. I saw no news. I saw no news that would provoke price action like this. Long up close 1 minute. Now we're now we're gonna take us out here at the high. Um, and I know it's happening, but for some reason I don't want to. I'm not gonna click the button. That's wild. That is wild. It's unusual for me to do that like that. But I guess this is just proper trading. You just don't just jump out because you see price fluctuate. What we wanted to see was exactly that. We wanted to see price come up, trade into the discount low of that small imbalance, and then get down. I'm just looking at the 30-second chart to see if that's what it's doing on the lower time frame. We're just watching right here on the lower time frame to see if that's what we're doing. We're at the low of this up close candle. If it's low resistance because we've just traded this, then it'll just begin to pour to the downside. No, it's still a lot of resistance here. For now, I like where we are. I'm not trying to develop an opinion about what's going to happen next. I'm watching to see what's going to happen next because I do not want to be lulled into a sense of uh I don't want to be lulled into a sense of bearishness if price is in flux. Watch. Watch this. Watch this. Watch right here. Watch right here. Do not I don't want to see it go above an up close candle until we start breaking these lows down here. And if we haven't broken the lows, and if this 5 minute candle hasn't closed below that prior 5 minute candle, it doesn't really mean much. Hmm. Hmm. 30 seconds left in the 5 minute candle. Here it comes. 30 seconds left in the 5 minute candle, and here it comes. We drop down below this imbalance. We put a wick at the consequent encroachment. We drop down here and close. Now we're back at the low of this gap. We've already tapped that consequent encroachment and moved down. We just claimed below it. We went up there, we tapped it, and we dropped out of that range. Please stay in. Please stay in the discount. Please stay in the discount. I'm giving myself a little bit more of a reward for staying in the trade this long. I'm want to see us stay in the discount and then move lower. We have just opened up a new 5 minute candle. The goal at this point is to move below just this candle and stay and close. This is the only 5 minute candle I'm looking at. I want to see us move below this 5 minute candle and close. Come on, babe. Come on. Okay, so we're starting to violate some of the down close candles on the 1 minute chart. However, we see that we're coming into this range again and again and again. When we come to a zone like this, decisions have to be made, right? Decisions, not us. We've made our decision when we hit sell at at the spot that we hit sell. We've made our decisions. Now the price action engine is making its decision, right? Prices when it comes back up, it's saying, is this fair value? Is this fair value? Is this a good price? Is that a good price? And so when we back into a range like this, that we've had look, this type of price action, and we've come back into this area, it says, lower than this? No, not right now, not this time, not lower than this. And that's, not lower than this. And every time we've come to this area multiple times, and it says not lower than this. And then right here, lower than this. It says no, not lower than this. It came up in here and dropped back down. Now we're asking it lower than this, and it's like no, not lower than this, right? And then it started to turn around on us. Now we're watching this 5 minute candle inside of all of this selling, saying lower than this, and it's like, well, we can go down there and check. And by the time it came down here to the wicks, it's like, no, 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 not that low. And but right now it's like, okay, higher than this, 10:52 a.m. All of a sudden, because we saw that wick, we saw the push down, we saw the drop down, we saw all of this. Now, instead of hitting that low resistance, we hit the high resistance. And we have to do serious calculations on the global markets, bank to bank, about where the next price is going to be. And when the discount is in balance, it's like, so are those prices too high? Right? Is that the premium? Right? The discount becomes premium, right? Is that the premium level? Is that way more than we want to pay? And so it's it's a tad bit intense. It's a tad bit intense. Now at 1 minute and 44 seconds, this 5 minute candle has, it has the life of this 5 minute candle is narrowing, and it looks like a long wick on the bottom of a bullish candle. This is trading entertainment, and it's a nerdy thing to be entertained by. But this is trading entertainment, right? This is trading entertainment. It kind of reminds me of that one film with the Jedi. This is pod racing or whatever the dude screamed out. This on the 30-second chart. What I would like to see is I would like to see us move down below that down close candle on the 30-second chart. Right there on the 30-second chart. You only got 20 seconds left. 30 seconds. Just get down. Just go down. Just go down. Yeah. Just go. Just right. We've been here since Friday afternoon. We spent all yesterday in these ranges. Look to the left, man. Look to the left. We spent all day yesterday. No, 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 no. We spent. Hey, hey, buddy. But we spent all yesterday in this range to the left. Then, well, you was that yesterday or the day before? Then we made a drop down. That was all yesterday. We spent all yesterday in this price range, and then we made a major drop down. We hit a down close candle. We popped up to this level. Then we created an imbalance with a small imbalance above it. Then we traded that small imbalance. Now we're at the low of the larger imbalance, the one that's on the 5 minute chart. Now we want to see this 5 minute candle remain in a discount and not go back into the premium of that 5 minute gap here. It's consolidation season. consolidation season. And for me, consolidations are very difficult to see, um, real time. It's just very difficult for me to see the true outcome in real time. And what I see as consolidation season is just prices, again, as I describe it, just going from inside this high to inside of that high, from inside this high to inside this high, from inside that high to inside this high. And it's just this back and forth. And personally, when I saw this long push down, now I'm seeing these wicks as they're staggering to the upside. I'm not thinking of inverting or inversion. I'm just saying, oh, that's all I'm saying. We're a consequent encroachment at imbalance just below our stop loss. And our stop loss is in the premium, but it's above it's above the intermission. It's above the mid range of the premium level. And price has spent a lot of time in this range all day yesterday. Our wicks and there are wicks and bodies on the hourly time frame that's as thick as uh thick as pudding over here. And then we just turned right around and just pop right back up, ran right into it. And so if that's where price wants to be, that's where price wants to be. I could not imagine that these ranges haven't been qualified and justified already, or why we would want to return to them at this point. There's so much to the left that we did yesterday, and then we tried to get away from it. Now we came right back to it. But if that's where we're going to consolidate, that's where price is going to return to. It's going to be like an equilibrium of a particular range because all price is going to gravitate toward those levels. Now that I see it like this, then I'm starting to say to myself, I don't want to trade in the middle, right? I don't want to trade in the thick of price action. I want to trade on the extremities because we can't really gauge direction properly in the middle of price action. So if price is consolidating even on the higher time frame, and then we find ourselves roughly in the middle of the range, then it's not going to be very clear into which direction price will go. And it really would be more along the lines of 50-50 than anything else. Yep, it would be more along the lines of 50-50 than anything else because we're so close to the middle of the range. And it has so much to draw from looking back, especially as the consolidation gets older and older, right? As the consolidation goes on longer and longer, then um, it becomes more and more unclear as to where price is going to go. Mm, mm, The way price is moving right now in the direction of my conviction are opposed. That is one reason why I believe maybe I should go ahead and say, you know, in this regard, well, I have a good stop loss placement, so it's not like it won't be bad. It's gonna be a paper cut of a loss on the day. I mean, literally a paper cut as far as losses are concerned. However, I don't like losses. I like gains, right? I like gains. This 5 minute candle is cleaning up the last of its pricing. So it's cleaning up the last of its pricing, and it's probably going to make another run lower to kind of clean things up, and then I think it's going to deliver higher. But I'm saying that not because that's what I believe, but because if I say it out loud and the computer system hears me, then it'll do the opposite of what I'm saying. The 5 minute candle dropped and closed lower than the prior up close candle. This up close candle run to the opening price of the prior 5 minute up close candle. We just tapped the opening price of that candle gently. And seriously, for me, these two prices right here are important to me. The closing price and the opening price of this prior 5 minute candle. That is an exit sign. This is an exit sign for me. It's just saying, oh yeah, no, I'm not respecting those levels anymore. I'm not respecting the up close level anymore. I'm running. I've run the high of this. I've taken out the high of this prior 5 minute candle, and that's it for me. This down close candle, had I placed an entry anywhere in here, I would have placed my stop loss here at the high of this down close candle. My stop loss is here at the high of this down close candle though. So I'm not gonna move it into areas of jeopardy. Um, it's just I'm just gonna just nurse this thing until it's over with. We've managed to stay below consequent approach rate for the most part, but we do have a big close in that little in the higher imbalance up there. And if I pull this forward, then this next candle was able to stay below the below this level on the 1 minute chart. Movement down below the down close candle would put a smile all across my face. Wouldn't it? Wouldn't it make you happy? Wouldn't it make you happy too? Come on, micro Nasdaq, it's gonna make you happy. It's gonna make you happy, micro Nasdaq. Just stopped all that climbing. Aren't you tired? Come on, aren't you tired? All that climbing. It's 11 a.m. It's interesting how we've been waiting on 11 a.m. to make the final decision to move up. Oh wow! Today is practically. It's a little bit. It's a little bit below break even. It's like I got paid and I went out to lunch right today. It's. I didn't buy. It's not like I went out and bought some fancy shoes. It's kind of like 30 seconds left on the winning chart, a minute and 27 seconds left, and then we will be, we will be. Hmm. This is what I call a fine line consolidation. A fine line consolidation is when the lower and lowest time frames are consolidating. Fine line consolidation. It seems on a higher time frame as if the candle just completely stopped moving, but on the lower time frames, like you go down to the 15 seconds, the 5 second time frame, it's literally just putting in this consolidation to the high of the previous candle, to the lower of the previous candle, to the high of the previous candle, to the lower of the previous candle. I mean, and it's so crazy. And fine line consolidation. And then I'm just sitting here like, oh, okay. What I really hate a fine line consolidation, I use this word hate a lot, but what I really dislike a fine line consolidation is when you and if you've blown any accounts, you realize that there's a time when there's only one contract left in that account to trade, and the entire life of that contract of that combine rests on that one contract. When you take this short in that last of that combine, it's the last contract of the combine, and you take the short right here, you're going to have, I promise you, you're going to have a fine line consolidation. You're going to hold your breath subconsciously, unintentionally. You're going to hold your breath. Wait for a new 5 minute candle just opened. you're going to hold your breath subconsciously and you're going to say to yourself, please, please go my way. And the price is going to say, as long as you're holding your breath, I'm going to hold price. Excuse me. As long as you hold your breath, I'm going to hold price. And here you are. And then it goes against you. I'm blinking my eyes because I'm looking at the higher time frame candles out of the corner, out of this side of my eye on this left chart over here. And I keep trying to refocus my eyes because I have to tell myself I'm not looking at a photo. Like that's not a photo. Why is it not moving? It's not a photo. This is weird. Manipulation to the downside prior to the move up. Why do I say that? Because we've been consolidating. And then the first move was to the downside. Yeah, because we've been consolidating, and it seems like the very first move was to the downside as we broke out of consolidation. That seems like manipulation to me. There are 2 minutes and 30 seconds left on the 5 minute chart on the prior up close candle, the one that's violated the one in the middle, which seems like a market structure shift. There's the high of the prior up close five. Here's the low of this prior up close candle. We've just come down to the close of this 5 minute candle. Just kind of swept. There's the wick low of that candle we turned over. And this is what I mean by manipulation. How many times did we touch this level? 100, 300, 500, 1, 2, 3, 4, 5, 6, 7, 8. You're thinking to yourself, there's no need to touch that level ever again. We've scrubbed it. We scrubbed it. Every bit of it, we scrubbed it. So for me now, I give myself another 50 cents or so on this trade by moving my stop loss down to here because I endured the consolidation and then price began to appear to move down in manipulation. And if it is not manipulation, then good. If it is manipulation, then I'm going to pay myself for enduring the amount of time that it took for price to decide to even manipulate. However, had it manipulated to the upside, it would have taken us out of the trade, but it manipulated to the downside. And I say manipulated because I am concerned about the consolidation. I would not scream out if I were you ever seeing a move like this. I wouldn't scream out, "Oh, we break it to the downside." I would not. Not immediately. It's suspect. There is a very small imbalance right here after the consolidation. There's a very teeny tiny imbalance right there. And here it is. Let's see if this means anything. Let's just watch this and see if it means anything to the market. All right, so here's the greater imbalance that we were pricing. We tapped consequent encroachment multiple times. There's a small imbalance that forms here just as price begins to break to the downside. Grady says, "Oh, I don't care about that. If we violate this small imbalance on the 1 minute and continue higher, then what does that mean?" Mm, 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 mm. Well, it doesn't mean much because we haven't broke the consolidation range. We haven't broken the consolidation range, right? So watch out for lower time frame, narrow vision, that myopic, short term, um, lower time frame vision. It'll zoom you in. You'll say, "What? But I thought we were going." What did I call it? As soon as I saw us break to the downside coming out of consolidation, I said, I think you got it. You was trying to make us think of going to the downside, but we're not going down to the downside." Oh, well, so we have this white line, and this white line represents the high of that 5 minute candle. Consequent encroachment is the high of the wick of the highest down close candle. That's where our stop loss is, just above that level. We can run that. I'll give you that. Should we trade up into this wick of the 5 minute prior 5 minute candle, roll over and break down? We have room for that. We have room for it. Are we going to? We're just waiting now. Because of the way prices moving back and forth, all types of um of expectation or all types of excitement and ambition toward the market doing one thing or another has been consumed in the consolidation. And I believe maybe that is the mm, purpose of consolidations is to exhaust liquidity. Yeah, at the it may maybe the purpose of consolidation is to exhaust liquidity. Is back and forth. Either let's fool them to thinking we're going long. No, let's fool them to thinking we're going short. And so here we have this, this invitation either side. This invitation either side. Come on, guys, come on. Come on, guys, come on. Come on, come on, come on. Come on, guys, come on. And so now that you have this invitation on both sides, pause. Now you have this invitation on both sides to get involved financially. Let's see if we violate this up close 1 minute. We do. It's gonna stop us out this time. Aggressively. Just move down. Oh wow, we're going down. And then we turn right over and then we last off. And there's an invitation on either side to get involved. And so many people get involved thinking this, that, or other thing. Then they're stopped, and then they're stopped, and then they're stopped, and then they're stopped. And then we're stopped. Then so many people or lose money trying to say, oh, maybe we're going short here, or maybe we're going long here. So we generate this liquidity, we engineer it. Oh. And then when the time is right, just about the macro, right? 10:50, 11:10, the macro ends. At 11:05 is when we broke to the downside. He screams out, manipulation. He screams it out, manipulation. But then Price is like, yeah, the real manipulation is I'm nowhere near finished consolidating. I'm not done. What are you talking about, manipulation? I'm not done. We're going back and forth for another 3 hours. Hmm. Okay. 55 seconds, and this is it. This is it. It's going to be the trading day. This is it. This is going to be the trading day. That's it. That's it. That's it. Trading day. I'm done. That was 3 trades. I don't know. Some people have the endurance to go 8 hours, right? And they'll watch back and forth for 8 hours, and it's fun for them and it's easy for them, and they really enjoy it. But I have a tendency not to be able to take multiple trades. Um, and maybe in the future I'll change that up where I'll be able to look at the market, get in and out all day, and really take full advantage of price action. At this point, I don't really have the desire to use my account to get myself in trouble. I don't really want to do that today. So that's that's it for today. So I just want to thank you all for joining me again today. I know I'm looking I say thank you all, but for anybody who watches this in the future, please like, please subscribe. And if you're interested in trading, ICT has a channel right here on YouTube. You can learn all about his price action strategies and concepts at the Inner Circle Trader. And that's the process that I use. That's the strategy that I use. And I use many of his models in conjunction with each other to find my way into price action. So I hope you guys enjoyed today's live stream. I hope you return again, like I said, like and subscribe. Be careful on the markets, and I am Grady on the charts. Say like and subscribe. Be careful on the markets, and I am Grady on the charts.